That's where we'll start with the Street's #1 retail analyst, JPMorgan's Matt Boss, here at Post 9. Welcome back. Nice to have you.
Good to be back.
I know you have a lot of actions today, but let's start on Nike because there was so much excitement and enthusiasm inside Nike headquarters and definitely on Wall Street as well for their choice of Elliott Hill. Even if a lot of people had to Google who that was, he is very well known inside the company, and it is a recognition by the board that they have to go back to the core. What has worked, the culture, going back to focusing on retail relationships. Why did you open a negative catalyst watch?
Yeah, I think you laid it out well, meaning the return is well received. And I think the need for change was very much paramount here. I think for us, going back to the old, it's really a returning to the old guard. And it's not just Elliott. They've brought back 3 different executives with more than 25 years of experience at Nike prior to 2020. So we're encouraged by that potential change. I think the timeline might just take longer than many anticipate. And to your point, that created the catalyst in terms of where we stand today. You have issues with innovation. You have issues on the wholesale front. It's very competitive, particularly in the last 2 years in terms of the backdrop that created where we stand today. So we lowered numbers for the quarter. We see a cut for the year. I think street numbers for next year are too high. They're embedding a return to industry growth. I think that's more of a 2027 type of a playbook.
Yeah, because the company reports earnings next week before
Yes.
even the CEO turnover. There's also this investor day that they were planning to hold in November. Not sure what the deal is on that, but I guess the point is that this will take time.
Yeah,
right?
so the investor day
happens.
the investor day timing, which was supposed to be in November, is now being reassessed. They had just sent out the invite for that 2 weeks back. As you know, Phil Knight had personally talked about his commitment to John Donahoe, who's now outgoing. And so
that was last earnings when Nike had its worst day in the stock market ever in end of June.
That's right. So as you think about where we stand today, to me, you have first is going to be the return to a pull market. And as you know, that's where Nike aims for full price selling. I think that's basically over the next 12 to 18 months, and that'll be the margin stabilization story with the top line growth tied to the scaling of innovation, more of a 2 to 2.5 years out, which would bring you to FY27 for Nike.
Is the degradation in EBIT margin from 19, is it an outlier? Is it like enormously large for a company this size? Or are there similar other comps?
So Nike historically has targeted a mid-teens type of an operating margin opportunity. They're now in the low double digits. And I think if you go back to this old guard coming back, it was more in the low teens. I think that's the opportunity. That's actually what we're modeling 2 years out. And if you put a mid-20s historical multiple on that, the stock is more or less fair value today. I think there is downside right now to our numbers and street numbers in particular for the next couple quarters and, as I said, potentially next year.
When Mr. Donahoe was appointed, what was the view of the board at the time in terms of what they thought he would be able to accomplish, and what did they misjudge or did he misjudge over these last number of years?
So it's interesting. Bringing back Elliott Hill has 32 years of experience at Nike. Mark Parker, before he took the CEO spot, had 27 years of experience at Nike. John was the outlier. John was on the board, but not a Nike internal executive. And so I think that cultural dynamic, potentially some of the changes. Now, look, what Nike has done well is expand and scale the digital, and that's where they now have a materially scaled, higher margin digital business. But I think that came at the expense of shelf space, where you allowed brands like Hoka, like On, into their key wholesale partners, particularly Run Specialty. And so now the competitive door has been opened, and I think you have lost market share, and now it's going to be, in my opinion, a multi-year effort to gain that back.